Welcome back to another week, guys. Markets have bounced back since Jackson Hole last week, continuing through the rally this week. And we're seeing NASDAQ or QQQ finally back over mid-vamp and holding, which is a good sign. This is basically our little tell that the base case for us is now all-time highs. It was consolidation. And once clearing that level, we have opened the door back to all-time highs being our base case.
Yeah, and we didn't even really get uh, crazy good earnings from Nvidia to get up here. Nvidia actually just dropped. They were, what are they, down like 1% today?
18
So
bips
it
or
was it
no,
was kind of a
80 bips. Yeah.
flop, but Nasdaq still managed to push higher. The S&P's at all-time highs. So we're definitely seeing risk getting pushed back out the risk curve.
Yeah, that's another thing. So we had this question as well saying like the market can't, we had this on X, the market can't lead without NASDAQ. NASDAQ not leading is a bad sign. And we saw this happen multiple times in 2024 where the S&P actually took out highs before the NASDAQ was able to. So you could see here as of today, August 28th, S&P or SPY ETF closes at new all-time highs. NASDAQ, on the other hand, is not at all-time highs. We still, as of the close, have to go up another 1.08% to get to all-time highs. And we've seen this dynamic play out before, and it likely, based on where we are with price, I think that's just our base case now. It's going to play out again. That you have a market here where tech got hit a bit hard, and we were very vocal about this 2 weeks ago, talking about how the AI trade, quote unquote, was being deemed over or at risk. And I think that accelerated specifically Mag 7 and um, the big leaders in the market, right, of the Nasdaq. It's very concentrated to the downside, and it kind of slowed their recovery. It's been a slow wait on their recovery with Nvidia earnings, etc., all really being Nasdaq centric. And I think that this is somewhat of the same theme we were seeing in 24, where SPY rips up to all time highs, and the Nasdaq will sit around, lag. Maybe it goes, up a little bit, down a little bit, and all of a sudden you'll get a move where it legs up and hits all time highs as well. So SPY hitting all time highs today was a good sign for us. We are actually thinking that it's even the odds of Nasdaq hitting all time highs are even higher today. Now that the S&P was able to reclaim all time and print new all time highs, as long as we're over mid vamp on QQQ, which we are right now, the base case is new highs.
Yeah, and we're even seeing the Russell breaking out more than anything, actually. Then I think that's just getting pushed up due to rate cuts being on the table now.
Yeah, Russell. I mean, that's another one where like, um, I think we're probably so a lot of people are very bullish on the Russell given the new easing from the Fed, right, and the new administration's attempts now to really get rates down. I think that the Russell has shown us quite well over the last 2-3 years here that it does really, really well on the initial expectations of rate cuts. But unless we get a significant amount of rate cuts, I think the Russell will actually remain an underperformer. I think that's probably a good base case to have. Now, I'm not saying you're to short this. This is a short. This is going to fall apart. It's bullish trend above mid vamp, new highs for the base case. I'm just saying I think that you have this initial surge post Jackson Hole where Russell has really been leading, right? And I think that will at some point die off, and the Russell will prove to be again a very stagnant index. And I think what really needs to happen is rates need to come down, likely below new. Like when the economy is overly um, loose, when the Russell is just on a real run. Like just go back to 2021, right? Like everything was easy up until the Fed started hiking. And you can just tell the way the Russell moved, like the way the Russell is going now, like we're still not even really clearing the 21 highs. So to me, I really think that the Russell is one of those indicators that say, look, the market is expecting some sort of dovish policy from the Fed. Great. I think we all understand that there's dovish risk now at the Fed. But um, I don't think it's one of those signals that says like, okay, small caps are the place to be indefinitely here, because I think rates, the amount of rates that are priced into the market, the floor of policy is still far too high for the Russell to really get cooking. And I think that as long as that's the case, the Russell will provide these unique euphoric little rallies, and then it'll almost like stagnate and consolidate further. And I think that's what we have been seeing, and we will continue to see here.
Yeah, but don't you think that maybe the neutral rate, as we could call it, for the Russell to be an outperformer is probably higher due to the fiscal spending?
Oh no, that's my point. So what I'm saying here is that the base rate across the neutral rate is higher than where it was in 21, 22, right? And I think that we are close to neutral, right? But we're not yet accommodative. And I think that the market needs to get into an accommodative stance, which doesn't necessarily mean we need a significant amount of rate cuts. It more so means that we need to cut enough to become accommodative. And I don't think what's being priced into the market right now is enough to be accommodative for the Russell. I think it's a good start. It's obviously, you're seeing some sort of consistent momentum here, but it's not what we would say as being like very loose to where like the junk codes really just run away from you. And I
Right.
think that that's what, when you're long Russell, what you really are is you're long junk. You're long junk, and your bet is that the risk curve will operate in a way where people will chase junk over quality. Now, there's a big argument that could be made that the Mag 7 is probably some of the best quality in the market. You can argue it's expensive, whatever, but it's in terms of quality and earnings power and earnings ability, there's some of the best companies, the Mag 7, right? Now, compare that to the Russell, right? Obviously, Russell is much more risky, much lower quality. But for the lower quality stuff to run, you need rates to be accounted because these are all companies with large debt burdens and high heavy refinancing costs. So I think that to play the Russell, to watch the Russell roll out and play correctly, you really need to see rates fall enough, which I don't think we're seeing, even though the neutral rate is higher, fall enough to really heat things up. And that would be, for example, like here's a good example. If the administration was able to stack the board of the Fed, right, and they were able to cut rates to 2%, right, which is well below the floor right now. The floor, the policy floor is about 2.9, 2.9%. So essentially, if they were able to cut rates an extra 100 bips in and put that into forward guidance from where we are right now with no sign of a recession, right? So no real sign of economic stress. They're just able to add 100 bips of cuts. I think the Russell at that point becomes more of a player in terms of outperformance because now you're really loosening conditions. And until that until that happens, when the floor doesn't really fall out from under itself, the Russell is going to be burdened with just high rates.
Yeah. Well, let's move on to Bitcoin. I think that's a very important topic to cover right now. And we've almost gone down to Momo. Will we get Momo? I don't know. Uh, but if it happens, it happens, and that's probably going to be where we bounce if we do get down there. But something that I've been thinking about on Bitcoin lately is I think we've gotten to that point now where Bitcoin's now a $2 trillion asset. And the most comparable thing to Bitcoin is gold, which is 20 trillion. So from here, you really only have about a 10x left in Bitcoin. Obviously, it's going to be more than that over the long run and in 20, 30 years, but that's kind of like the reasonable type of return. You're not going to be getting this like 50% compounded annual growth rate holding Bitcoin anymore. And what we saw recently with this sell off was just a handful of whales selling. Like they've been holding on to their Bitcoin that they bought for a few $1,000s, and now they're worth a few $1 billion. And it's not as feasible to hold that much cash in this asset anymore when it doesn't have that same upside that it used to have. It's a lot more comparable to other asset classes now. Like you can get a comparable CAGR with equities. You can buy high performing stocks that have the same kind of volatility structure, but also the same potential returns. So it it kind of gives these whales a reason to sell off. And I think that's why we're seeing this sell off here, even though we're in an environment where it's high inflation expectations that continue to rise. We're in a strong growth environment. This is exactly what Bitcoin needs to perform well. But then you have this selling pressure from these whales taking some chips off the table just because the potential isn't there anymore.
Yeah, that's a good way to look at it, and I think honestly that you're not wrong. I don't. I think to some degree, Bitcoin has really. We actually shifted the leverage factor in our Bitcoin model from 1x to 2x. We now use some leverage on Bitcoin because of that fact that look, the asset class is so big, it can definitely. Let's also remember there is the theory out there that it could flip gold one day, right? So it would be at least 5 times higher. Very simple. Very possible if it were to do that, right? It's simple, comparable. You're going to flip gold 5 times high, 5 times plus higher. Okay, but I think that the way that you have to look at this here is the whales that are liquidating and people that are coins that are changing hands and whatnot. It's not necessarily bearish. The reason I say that is, look, you're gonna have people that have come out of the asset class and some people that come into it. Especially, like for example, you have the hyper growers, the people that were, maybe they've been long since 22, 23 from 20K. It's now 120, 112K. It's been chopping around. Maybe they start unloading and finding other, pushing out on the risk curve, as they like to say. But you also have a new generation of investors coming online that maybe were at one point too conservative for Bitcoin, and Bitcoin's kind of moved up the risk profile. And like, you're talking about 10% dips here that are now scaring people, notably on the internet. People are, saying like Bitcoin, the top is in and we're down 10%. I remember when we used to put in 10% candles.
Yeah.
So like, I just think that, you know, the attention Bitcoin is attracting is also a byproduct of its shift in size as an asset class, and these are all good things. So, like, the way I look at Bitcoin is we had some weird weakness here, and I think this is what everyone's noticing. Bitcoin's been weaker than equities, notably, right? Bitcoin's down 10% off highs. Equities are not. S&P is actually at new all-time highs. But I think that Bitcoin also has these ebbs and flows where it goes through pullbacks, and then it'll snap back and it'll outperform to the upside as it did to the downside. So for me, I'm unfazed, still locked in long Bitcoin. And the way that I look at this is saying like, okay, we're in a regime that's supportive. The trend is supportive. I think that we really need to start having conversations if Bitcoin can't hold like the 106, 106, 107 area, which we haven't even seen yet. And honestly, a dip down to there is not the bearish outcome as long as it holds. We've seen nice touches in the past where we get close and we bounce back, and we've seen scenarios where we break through and unload into a new bearish trend. I think given the risk dynamics we're seeing right now in the market being risk on, it's very unlikely we see some real sustained bear trend in Bitcoin. I think really what's going on here is there's some capital rotation, like you were talking about, and when this starts going back up, you kind of have the momentum come back into the upside as it did somewhat to the downside, and that again creates the cycle where Bitcoin retraces to new highs.
Yeah. Yeah, well, especially because like that capital rotation, a lot of people noticed that the whale that was selling, or the few whales that were selling, they
Didn't he like one
rotated.
clip it? Didn't he like one clip it until like one order on a weekend or something like that? Didn't
It was on a weekend, yeah. Like I don't know if it was one order. It was kind of like a staircase down, not an elevator, but
yeah.
yeah, they rotated into Ethereum. So I think that just like shows like okay, Ethereum obviously has more upside than Bitcoin from here. It's a smaller asset. So I think it's just not like Bitcoin just doesn't have that upside that some of these people are used to, and it's time for them to just rotate out of the asset. And I think we're probably going to see that more and more as we get higher up.
I'm still a fair believer, and I would hope one day to be proven wrong because it would really show some maturing in the space. But I think you are too. That Ethereum needs Bitcoin to go up for it to go up, right? Not the other way around. Like if Bitcoin goes down steadily, Ethereum will get hurt. And I think that one of, obviously Ethereum needs Bitcoin. Bitcoin doesn't need Ethereum. And I'd like to see an environment where maybe, Bitcoin acts more as the digital gold in the sense that it's more directly competing with gold. It's more directly competing with uh, very isolated, central bank policy. It's very attuned to interest rates, real yields, and stuff like that, and more so beyond real yields, inflation expectations and things of the sorts that would move gold, right? Central bank independence. Now, we're not really there yet. I think Bitcoin is kind of like in this phase where it's trying to be two different assets. It's trying to be that global debasement hedge, but it's also trying to be that risk on speculative play. And maybe we're reaching the point now where that speculative aspect of it is kind of being phased out and moved out of the risk curve. And we're starting to see more of just a real true digital gold, which would be interesting to see this mature. But until it really happens, we have proof that, Bitcoin can't make new all-time highs for months or, weeks, year, well, even a year, and just does nothing, dead capital, and Ethereum just goes on a monster bull run, which I think is highly unlikely. But I think that would probably be a signal that says, look, okay, like Bitcoin's almost no longer that risk on asset that we're thinking about and that we're used to. And I think that the biggest tell out of all of this would be if we get a recession or a severe economic slowdown, if it's from shock in fiscal, or if it's, the Fed overstaying their welcome and restrictive in territory, and they basically over tighten, whatever that is, Bitcoin doesn't actually fall. If anything, it actually goes up and traces with gold. I think that would be the sign that Bitcoin has matured in a way that would make it not necessarily the best risk on asset. You would be better off chasing other sorts of crypto in that direction. But until we really see that happen and visually, prove it, because we could say whatever we want. Oh, Bitcoin's acting like gold. Ethereum's the real beta, or the alpha. Sorry, Bitcoin just basic beta. Ethereum is the alpha. Ethereum's going to really run laps around Bitcoin. And then you get some sort of risk off event in the near few, 6-12 months. We don't expect it, but if we do, and Bitcoin goes down 45%, then what do we say then?
Yeah.
Right?
Yeah.
So I think we kind of need to see that, let's look back in time. We saw Bitcoin get absolutely smoked in 2022, and that was actually the lows of the industry, literally industry lows. Like the industry was on the brink of actually never coming back from that. And we've come back quite well. Things have matured, obviously, in this administration quite well. Stable coins, all these things, right? And I think that there's solid, cases to be made that there was other cryptocurrency out there, or at least call it risk on assets, speculative assets that actually can serve better risk on positions than Bitcoin, given if Bitcoin is to no longer be that risk on asset. This is the tree of decisions stems at the top of two choices. Is Bitcoin a risk on asset? Yes or no? If no, then in the future, we'd have to have some more evidence, at least for us to really shift models around to confirm. But if no, if it's no longer a risk on asset, then it would make sense that it underperforms now going forward in these risk on regimes where it's not necessarily running laps. However, if it is still a risk on asset, you actually run some serious risk here, writing it off as not a risk on asset, basically writing it off as a safe haven and going out of the risk curve beyond your skis to areas that you think are, the only place you can find returns because Bitcoin doesn't have them anymore. And you get a risk off event, and the thing you have is down 80% and Bitcoin's down 35%.
Yeah,
Right. So I think
definitely.
that's the problem that we're at, that the junction that we're in right now, that we have to go through, is figure out where exactly at 2 trillion, 3 trillion does Bitcoin fall? Is it still that risk on asset just with lower vol? Because that would be a great thing as well. If Bitcoin is still that lower, it's a risk on asset with lower vol. But I really think that the characteristics of what make Bitcoin, they have to shift at some point to at least try and compete with gold more than with equities.
Yeah.
Because
Like as of now, you can really tell like when the market's open, like Bitcoin's moving with the NASDAQ, more or less.
right. And I think for Bitcoin to like, if you want Bitcoin to go 5x from here, there needs to be that understanding. Like there's still immense returns to be had if it can gain this sort of risk dynamic respect, where it can act as a risk off asset. Because if it becomes a competitor with gold, you could revalue Bitcoin 5 times higher quickly. But the idea that Bitcoin's going to have these perpetual gains is the problem, right? If Bitcoin is slowly falling off the risk curve and it's becoming more conservative in terms of long term, storing money, um, store of wealth, really just call it hard digital money, then the correlation towards risk should inherently fall as more people enter the space with that belief. But if Bitcoin still has the belief that look, it's digital currency, it's magic bean money, we're just ripping it, and we're gonna buy until the last person stops buying. At that, basically just a leveraged way to play risk on. If that stays the route, then I think you're fine to stay long Bitcoin. And this is why we shifted our leverage, because if Bitcoin starts producing modest risk on regime returns, there will be some time, there will be a period that lapses before you can really acknowledge Bitcoin as a pure risk off and hedging asset. You're not going to be able to know this until you have the events that confirm it. So if Bitcoin starts putting up these lackluster returns where it's not really rallying the way everyone expects, the leverage factor, due to its falling volatility that we've seen and realized, will allow us to at least get returns in the space while we try and figure out where the asset class is going. But there is also a great chance that look, Bitcoin's going to stay Bitcoin, and I mean, just in the look where we are from April, right? From April lows, Bitcoin is up 50%. Like that's not risk off behavior. Like that doesn't show signs of like these risk off dynamics, right? I mean, we went right into risk on pretty much after April and risk on asset ripping, where gold, right? Gold has done nothing. It looks like it's starting to break out, but it hasn't done anything since April. Notice when Bitcoin bottomed and ripped, gold topped and pretty much stopped going up. Like that was the whole risk on regime shift. We went into risk on and came out of it. Gold ripped and pretty much did nothing. Bitcoin, on the other hand, bottomed out and started ripping. So I think that to say that Bitcoin is this risk off, gold comparable is still very early, which is why we're still long Bitcoin. We still treat it as a risk on asset. We put some leverage on it, very small amount, nothing, crazy like some of these perp traders do, just simple 2x leverage. And we're riding the wave here, and we're going to ride this out until we see more significant statistical evidence that look, Bitcoin is no longer that risk on play. Thank you guys so much for listening. If you have any questions, feel free to reach out to us on X at the Market Radar or go to our website at market-radar.com.